2022 has been quite a year for investors. We've seen heavy volatility and downward moves in the market, and from the start of 2022 to the end, the S&P 500 has fallen around 20%. And while the FTSE 100 index has only dropped around 1%, it has been very up and down over the year. So how has my dividend investing portfolio performed over 2022? In this video, I'll provide a detailed review of my dividend stock portfolio and the dividends that I received over the year. I'll also talk through the stocks that I bought or sold during that time, and discuss my investing plans for 2023. Finally, I'll give a quick annual update on my income and expenditure for my rental property investments. At the start of 2022, I had £32,052 invested. Currently, I have £45,294 invested. So my portfolio has grown by around £13,242, and in percentage terms that is a 41% increase. If we look at how my invested amount has grown each month on this graph, we can see that I have been really consistent with my contributions, and the line continues to trend upwards. And to break this down even further, this is how much I've added into the portfolio each month over the year. These are purely my own contributions, without any reinvested dividends. I have budgeted to be able to consistently add £750 each month, but if I do have anything left over at the end of the month, I tend to add that in as well. You can see that over the first half of the year, I was adding in extras a lot more than the second half of the year. This is just the effects of the cost of living increases that have affected us all. And despite my best efforts, I just found it harder to have any cash left over. The total market value of my portfolio was quite volatile over the year. At the highest point, I saw unrealised gains of 16.2%, and at the lowest, gains of 5.07%, so quite a spread. But as a dividend investor, I haven't worried about the market value of my holdings at any point, as I don't ever plan on selling any of my shares to take cash out of the portfolio. I'm only ever interested in the income that the portfolio generates through dividends. My investing strategy is to build a cash-generating asset that pays me passively each month. So every penny that I invest into the portfolio will stay there, and I won't ever touch the principal. These contributions are topped up through reinvesting any dividends that I receive back into the portfolio to buy more shares that will pay more dividends. And then I'll just allow the compounding process to do its work. If we look at what's contributing towards my returns, we can see that the majority of my portfolio is in the green, and has yielded a return on my investment, which I enjoy seeing in a visual. But we can see that Disney is still the biggest unrealised loss, but I am confident that this will yield a return in the future. It's a company that I can't see going anywhere anytime soon. And here is my full portfolio, with 30 holdings in total. And breaking that down further, these are my top 10 positions by market value. The ETFs do take up the top 5 positions, and eventually I do want each of these ETFs to take up 10% of my portfolio. Looking at the intrinsic value of my portfolio based on free cash flows, it's suggesting that it is undervalued at the minute. This valuation model doesn't take into account my ETFs, so it's just the individual stocks that I own. We can see that the market value is around 30k, but based on the free cash flows that the business generates, the valuation would be closer to 42k. I do place a lot of emphasis on a company's ability to generate cash when I choose which individual stocks to invest in, so for now this is a pleasing metric. And the apps that I'm using are Trading 212 and Simply Wall Street. If you are based in Europe and interested in starting a portfolio with Trading 212, I do have a link in the description where you can use my code and we'll both get a free share worth up to £100. I've also left a link to Simply Wall Street in the description as well, which is a really nice investment tool that I use to evaluate companies and track my portfolio's performance. Simply Wall Street is free to use forever, but if you do want a 14-day free trial and a 30% discount to use all of the features, then you can sign up through my link below. My long-term aim is that the snowball effect of compounding reinvested dividends will eventually mean that this portfolio can start to contribute towards my monthly expenses. And I'll let you know how much I'm currently making later on in the video. The dream would be that I could retire early and live off my dividends. But even if I don't achieve this, then I'm hopeful that the portfolio would be able to pay for trips away with the family, or even allow me to work part-time. So what stocks have I been buying and selling over the year? Naturally, with an additional investment of £13,242 over the year, there have been a number of purchases. You can see that I've been heavily buying into ETFs, with around £6,484 spent. Then the remaining purchases were topping up my blue chip dividend payers from US and UK companies. And now looking at the sales, I've actually fully sold out of 15 positions over 2022. When I first started investing, I can admit that I did buy too many stocks. I had around 56 at one point. Now this might be fine for some people, but for me, I struggled to keep on top of current business news and what was happening within each company. So the obvious move was to trim this down. And I have sold companies that I believe are good companies. But if I do have any sort of doubt over the business or the industries, I will sell. So after all of the buys and sells, I end the year with an overall dividend yield for my portfolio of 3.38%, which equates to around £1,530 per year in predicted dividends, or £127 per month. There will always be a discrepancy between my actual dividends received and my predicted dividends, just due to the timing of me purchasing shares and then being eligible through the X-day of the dividends. Now let's look at the dividend income I actually received over the year. The total amount paid to me was £1,379.71, which works out at £114.98 per month over the year. It was a target of mine to hit £100 per month as an average, so I'm obviously really happy to achieve that. June, September and December were particularly big months for me, and this is just because these are the months where my ETFs are paid, which are my largest positions. I have sold some of these dividend payers, shown now in red, but as mentioned before, the proceeds from the sales have been used to buy other dividend payers, so it shouldn't affect my portfolio too much. £114.98 is a really nice monthly average, but my next target is to eventually earn an average of £150 per month consistently. At the current yield, I will need to invest £53,254 to theoretically hit this, so I do have some way to go, and will need to invest around a further £7,959. If I can invest a minimum of £750 each month, plus reinvested dividends at the current average, this should take me around 9 months. And I'm confident that this will happen one day in the future if I stick to my investment strategy. If we now look into this graph, which shows all of my dividends since I started investing in 2020, we can see that the numbers are increasing year on year if we compare the purple 2020 bars with the blue 2021 bars and the green 2022 bars. The average monthly dividend in 2020 was £45.29. The average in 2021 was £77.88, and the average in 2022 was £114.98. Again, I've not done anything special, and all I've done is stay consistent with my contributions and dividend reinvestments. Looking at the percentage growth in dividends year on year, from 2021 to 2022, my dividend total increased by around 48%. This was better than expected, as my target is to make sure that the year-on-year growth stays at least 20%. So if I can invest another £9,000 into my portfolio, and maintain my current 3.38% yield, this will bring in an extra £304.20 in dividends. And if I do receive £1,380 again, plus the £304 extra, I can expect around £1,684 next year, which would be a 22% year-on-year growth. This obviously isn't taking into account any dividend cuts, dividend increases, or being able to invest more than £750 each month. It's just a soft target for me to shoot for and forecast. Looking now at this graph, this shows how my actual monthly dividends compare with the 3-month averages in orange, and the overall rolling average in purple. It's pleasing to see a positive upward trend. As always, all dividends stay in the portfolio and are reinvested into purchasing more shares, and I haven't taken a penny out of my portfolio since I started investing. Therefore, my portfolio has earned a total of £2,889.29 in dividends since I made my very first share purchase back in December 2019. By reinvesting the dividends, this has increased my portfolio from £42,405 to £45,294, which is a growth rate of around 6.81% so far. As more dividends are received and then reinvested, I do expect this percentage to get larger over time. I also invest in real estate and currently own 2 buy-to-let properties. Over the course of 2022, this is what the finances have looked like. The rental income has remained constant, as have the management fee. I've had my tenants in for a while now, but one has just served notice that they'll be leaving in 2023. I did fix the mortgage again in November, as my previous fixed rate was due to expire and move on to a variable rate. But unfortunately, the best deal that I could find meant that the monthly cost has increased by around £120 per month, which isn't ideal, but it would be a lot higher on a variable rate. Thankfully, I've not had any repairs or maintenance issues all year, which is a bonus. In December, I did get the annual service charge and ground rent invoices, plus one of the yearly landlord insurance renewals. So my pre-tax profit over the year is £7,021, which works out at around £585 per month. For my rental properties to be more profitable, I would really need to overpay on my mortgages to bring that mortgage cost down. It's something that I will likely look into over the next 5 years, but that would depend on me increasing my income to afford any overpayments. The rental profit just sits in a separate rental bank account, and this covers the mortgage payments and the tax bill. And I also use it as a bit of an emergency fund and dip into it every now and then if needed. So that concludes my 2022 review, but what am I planning on doing over 2023? More of the same really, and that is to stay consistent with my monthly contributions and reinvest all dividends that come my way. I don't see me adding any new positions to my portfolio, but I do see myself potentially trimming some more companies off. I would like a smaller, more concentrated portfolio, but I am fairly happy with where it's at currently. The aim is to just keep adding as and when opportunities arise. Now that you've seen my yearly review, I'd be really interested to hear from you, the viewers. How has 2022 been on your investing journey? And what are your investing plans for 2023? Let me know in the comment section below. I'll be reading and responding to every message that I can. I hope that you found this video interesting and informative, and I hope that it's given you inspiration and ideas for your own personal finances. If you have, please like the video and subscribe to the channel to make sure that you don't miss any future videos. Thanks again for watching, and I'll see you in the next video.